98 days before the midterm elections, but just 50 minutes away from officially bidding the farewell to the month of July. Kind of hard to believe, but here comes August, folks. Before you cry into your coffee that summer is slipping by, here's another reason that the bulls should start blubbering. Historically, August has been the second worst month of the year for the S&P and the NASDAQ. Will history repeat itself as we step into the last month of the summer? To the floor show. And guys, I don't know, maybe this year might be a bit different, but either way, what's the one move you're making to prepare yourself for August? John Corpina, I'll start with you.
There are two areas I'm looking at. One is tech on a short-term basis. It has gotten beaten down. We're going to hope that Apple today helps that out. And the second is retail. I know that is a sector that we're always pretty down on, but you said it. We're heading into August. The tiers are coming out. Back to school. Back to school always adds a boost in August and September into that retail area.
I like that. And back to school, I know kids are going back August 19th or 20th. Scott Bauer, what about you? A, do you believe that August is going to be one of the worst months for the NASDAQ and the S&P? And B, what do you do anyway? Because we don't know yet.
Well, this year has been anything but usual, right? We have seen no consistency, no pattern this year. So no, I don't think August is going to be that poor of a month compared to where we have been in the past. And that's one of the reasons, Liz, why I really like gold here. Everybody is down on gold. You know, it's been the risk hedge, which hasn't worked out with all the geopolitical events we've had. Yes, the rising dollar has definitely helped keep the price of gold down. I think we have bottomed out. Maybe there's another 1 or 2% on the downside here.
Well,
I think this is the way to go going into the last part of the year.
Interrupt you. I looked at gold earlier today, and unless I was seeing things, it looked like it was down $5 or $6, but now it has punched up into positive territory. Anything you saw that
Yes.
got it from down to up here?
No, not really. And we saw the dollar trade in a very, very tight range today. It was down a little bit this morning, ended up a couple pennies. I think that we're seeing just a bottom coming in here, and really it's just leveling off, and it's an opportunity.
And Phil, our buddy Phil, OPEC, of course, hit an output of a 2018 high. Obviously, they've readjusted and they've capped some of their cuts that they had from last year, but suddenly oil is dropping so dramatically.
It is. Well, and I think the main reason why OPEC did that is because they got pressure from Donald Trump saying, hey, guys, you got to start raising production, especially if we're going to put the screws on Iran. And that really, people forget we started the month of July at the highest level we've seen probably in a couple of years. Oil prices are at 75. So even at this price level just below 70, oil percentage-wise has had one of the worst months it's had in a couple of years. But really, in the big picture, we've got to focus on Iran. Donald Trump, of course, those statements yesterday, hey, he's willing to talk anywhere, anytime. If he does talk with Iran, that could be a huge game changer. And the other thing, of course, is the Chinese talks. If we start lifting tariffs on China, you can start raising your demand expectations on oil today. And that means the month of August could be really explosive to the upside for the oil market if we get some of these deals going. So it's going to be really interesting to see a lot of headlines coming.
All right. I, for one, am a little depressed that August is suddenly here starting tomorrow. Good to see all of you. John, Scott, Phil, thanks so much.